with leverage. And if you think that that sounds interesting, then I think that you should definitely keep watching this video. Hello guys and welcome to the moon. My name is Carl and I'm ready to bring you this BitMEX tutorial video. This is going to be a very easy to understand and basic tutorial to get you started with BitMEX. And the first question that I usually get is, can you lose more money than you deposit into BitMEX? And no. If you deposit 0.1 Bitcoin, you can never lose more than 0.1 Bitcoin. But let's get right into it and let's start with how to create an account. And first off, go down into the description and use this affiliate link that I have down here. That will give you 10% off of the fees, which is of course very valuable, and you will have this discount active for 6 months. And you will end up at this page where you have to register, and if you live in the US, you are going to need a VPN. Alright, so now I've created this brand new account with you here, guys. So what you see should probably look something like this. And let me show you how to deposit Bitcoin. Up here you can see total. If you click on that total here, you get to your wallet and you click deposit. As we wait for the deposit to get deposited, let's go back to the home page here. And the reason why it says XBT instead of BTC is because of the fact that on this exchange we're not trading actual Bitcoin, but we are actually trading contracts, so derivatives. So that means all trades are always in terms of contracts, not in terms of BTC. So up here is where you will spend most of your time. Here's where you place your order, and the second tab here is your position and the leverage we're going to assign to our position, and down here you have contract details. Now we're just going to focus on the place order to start with. If you're watching this video, you should already know what the difference is between a market order and a limit order, and for the purpose of this video I'm going to use the market order here. So now the deposit has arrived, 0.05 Bitcoin approximately, which is worth about $260. And like I said, all of these positions are going to be in terms of contracts and not in terms of Bitcoin. So that means this position is 100 contracts, or equivalent of 100 US dollars. And remember, I have Bitcoin worth $260, but this is without leverage. Alright, so let's say I want to put in a position worth 100 contracts of 100 US dollars, and I want to go long, and well, this would cost me 0.0185 Bitcoin, and the order value after fees would be pretty much the same, as you can see, 0.0184. And well, what happens if we use leverage? Because this was without leverage, so the cost and the order value are the same. What if I press 10x leverage? Which means that we're going to control more Bitcoin than we have to put up with. Now you can actually see that the cost went down. It's now actually just a tenth of what it was before I pushed the 10x leverage here. But the order value is actually still the exact same, as you can see. Which means that we're controlling the same amount of Bitcoin, even though the cost of this position went down. So using the leverage does not increase your position, it just decreases the amount of margin you have to put up to have the position open. So this means that if I push 25x leverage here, for example, you're going to see the same thing here. The order value is still the same, but the cost went down even lower, as you can see. And let's make two real-world examples. Let me first show you how to make a leveraged long position, and then how to short Bitcoin with leverage. And to view the Bitcoin price better, I usually use TradingView, and there will be a link in the description. This is the charting program I use. Alright, currently Bitcoin is at $5,390 approximately. Let's say that we believe that right now Bitcoin is going to go up to right here, right before this resistance point, and that would be at $5,761 approximately. Let's say we actually believe that Bitcoin is going to go up there. Well, that would mean that Bitcoin would have to go up approximately 7% from where we are right now. So this means that without leverage, if you bought Bitcoin right now and sold up here, you would gain 7% profit. Let's see what we can do with leverage. The total balance is your current position and everything else, so it's your total balance. So available balance is simply the Bitcoin that is not currently used in a position. Alright, we want to buy 100 contracts, so 100 US dollars worth of Bitcoin. But let's say we want to go on 10x leverage now. This means that the cost is going to be this much, and that is lower than our available balance, so it's fine. And the order value, so the amount of Bitcoin this position is going to be worth, is a lot higher. It's actually 10 times higher because we are on 10x leverage. And if we want to do a simple little calculation, we can use the calculation feature up here. And here we can actually calculate a little bit about our position. So leverage is going to be 10, just like we said. And we want our position to be worth 100 contracts. Our entry price is going to be the current price, which is 5,390. And what did we say? Well, the exit price, we wanted to exit up here at 5,761. Exit price 5,761. I already have that in there. So our margin for this position would be this much. So this is how much balance we're going to need for this position to open. And the profit loss would be 6% in a normal circumstance. But because of the 10x leverage, our return on equity, so our return on this margin is going to be 64%. 10 times higher, and this is the magic of leverage trading. Alright, so when using leverage, there's something that is called the liquidation price. And there's a liquidation price because of the fact that when you use leverage, you are basically borrowing Bitcoin, or you're borrowing these contracts from BitMEX in order to control more Bitcoin than you currently hold. So if you lose your position, instead of you actually going into debt towards BitMEX, there's something called the liquidation price. And if we were to enter our position right now, the price is currently at about $5,400, and we said we want to go on a 10x leverage, right? This means that our liquidation price would be at $4,931. So let me show you in the chart how that would look. So this is our entry line, up here is our exit line, and where is the liquidation line going to be? Well, it's going to be down, approximately down there. Let's make that red. So we want the price to go up because we want to make money. But if the price goes down and actually goes down to this level, you lose everything in your position. It gets liquidated. And let's say we think that's a little bit risky. Let's say we want our liquidation price to be a little bit lower, maybe at 4,300 approximately. Well, we're going to have to decrease our leverage. Let's try 5 instead. Well, that's pretty close. But basically, to get the liquidation price as far away from your price as possible, you have to go down in leverage. This also means that if we go on a 25x leverage, for example, which is a more riskier trade, the liquidation price would be at $5,200, which would be very, very, very close to the current price, as you can see. This means that a small little volatile move, a small little drop, and you lose this whole position. So the more leverage, the more risk. Alright, but let's try to put in a long position. Remember, our Bitcoin is worth approximately $260, but thanks to leverage, I can actually do this. I can actually put in a $1,000 worth position, even though my balance is only worth $260. It's going to cost us this much, which is lower than the balance, but we are actually going to be able to control 10 times as much, as you can see here. So $1,000 worth of Bitcoin. And you can clearly see that the order value is way bigger than the available balance. Alright, let's click buy market to see what happens. We're going to buy 1,000 contracts with a market order with 10x leverage. The order value is this. The cost is 10 times less because of the 10x leverage position, our available balance. The market price is the current price of Bitcoin, and the estimated liquidation price. Make sure that the liquidation price is not too close to the price. And here you can see that we are 8.6% away from the liquidation price. So it only takes Bitcoin a volatile move of about 9% in order for us to get totally liquidated. But let's say we actually accept these risks and we click buy. There we go. Order filled 1,000 contracts, and now if you scroll down a little bit, you will actually see your new position down here. 1,000 contracts, the value of our position, the entry price is where we went in, market price is the current value of Bitcoin, and liquidation price is where we get liquidated. And here you have the return on equity right now. So exactly right now, I'm actually up 1.7% already. So this means that if I close this position exactly right now at market, this means that I am going to realize this profit, which is about 1%. So let me actually do that. I'm clicking close market right now. I'm selling this close market position. Now I'm closing this position. Okay, let's now try a short position instead. And you can do the exact same thing with the profit loss calculation here. But instead of going long here, you press short. And let's say we want to do the exact same thing, 1,000 contracts, we want to go short. Okay, so we have the same entry price, of course. That does not change. But let's say we are bearish. We believe that the price is going to go down to $5,000 all the way down there. We want to go on 10x leverage. The entry price is the current price. The exit price is 5,000. That would mean profit loss of 8%, return on equity 80%. And let's see what our liquidation price would be. Let's push here. Short 10x leverage. Liquidation price would be at $5,948. What we want is the price from our entry price to go down here, because that means that we will make a profit. But if the price actually goes up from here and reaches the liquidation price, our position will actually get liquidated and we'll lose this whole position. Alright, we want to sell 1,000 contracts, so let's click sell markets. So now we are basically shorting Bitcoin with 1,000 contracts on 10x leverage. The order value is going to be this. The cost is 10 times less. And the liquidation price is 10% away from the current price. And this is the liquidation price. So let's click sell. And there we go, order filled. Now we have a short position on Bitcoin, which means that when Bitcoin starts to move down lower, we are actually going to make money. So the position size is minus 1,000 because we sold. Value, entry price, mark price, and this is our liquidation price. And so now we actually have a short position on Bitcoin. And now you can see that the total amount in our account is still the amount that we deposited, but the available amount is the amount that we are currently not using for this position. And if you want to withdraw money, you just click withdraw. But one important thing to understand is that BitMEX only withdraws once a day. So if I click withdraw right now, I'm going to have to wait until that specific time at which BitMEX approves all the withdrawals. And one other frequent question is, how can I hold two positions open at the same time? And you cannot do that. In that case, you have to create another second account, which is totally fine. And in that case, you can just simply go to Gmail, create a new email, and then you just create a new account. And if you already have an account on BitMEX, but you are unsure if you actually have the 10% discount, just create a new account with this link, and then you'll be sure that this discount is actually activated on your account. And right now we are seeing volatility coming back into Bitcoin, which means that there are going to be a lot of opportunities to short and long Bitcoin at a profit.